going to be a very difficult task. To your point before, over the next year, as they're completely revamping their operations in this more virtualized world, they're going to really be struggling to sort of bring that information together in a way that's consistent and provides the right level of evidence. All right, so thanks everyone. Welcome to this podcast or this webcast, whatever we get to call it these days. I'm joined by SK Karanam from Wolters Kluwer. So I'm Tim Carberry. I'm a managing partner with CastleHill Management Solutions, responsible for our risk management capabilities from a consulting perspective, from an advisory perspective overall. Today's activity, we're actually going to mute anyone who comes into the meeting, so no disrespect intended. But if you have any questions, please do put them into the chat that'll be going along with the Zoom meeting throughout the event. SK and I are going to talk about a couple of topics, just to go back and forth on a couple of items. But it's going to be a free-flowing activity, so don't hesitate to interject with questions, and we'll get those towards the end of the podcast. So thank you anyone for joining, and we'll have a good session. So SK, if you would be so kind, could you introduce yourself?
Yeah, thank you, Tim. Always a pleasure to collaborate with CastleHill and yourself. Not only on this particular discussion, but also offline when we cater to our common customers. So everyone, my name is SK Karanam. I'm the market manager for the Compliance Program Management Business Unit within Wolters Kluwer. Within CPM or Compliance Program Management, we are focused on providing regulatory content to financial services. That would include broker-dealers, investment advisors, wealth managers, banking institutions, insurance companies. And particularly when we deliver our content into technology such as Archer is where we try to collaborate with partners like CastleHill Risk.
Excellent. So SK, why don't we jump right into it? And maybe the key point, because of course we are still deep in the pandemic in October of 2020. How are financial services consumers being impacted by COVID and by the pandemic overall?
Absolutely. It's been like a prolonged period of adjustment for consumers. There's been like sudden and immediate impact for a number of consumers. For example, a variety of student loan lenders had to follow new rules in terms of giving relief to consumers who are impacted with job losses or some form of change in lifestyle because of the pandemic, taking on some additional responsibilities within the home, health-wise, whatever the case might be. We're definitely struggling with making loan payments from a student loan perspective, or we're dealing with issues with paying rent. We're dealing with issues such as paying their mortgages. A variety of issues have come into effect immediately. And there has been also a decent amount of response from a relief standpoint, not only from attorney generals and governors of various different states, but also from regulatory bodies. For example, take Governor Newsom in California has immediately provided a lot of relief for student loans in particular, where some of the due dates have been extended by over 60 days or 90 days, within the state of California. Similarly, in Florida, the state governor has established a statewide moratorium on evictions. And there was also relief that was provided in terms of payment of rent. And laws were passed to protect consumers to deal with evictions on top of everything else that they might be dealing with. Similarly, in the insurance world, particularly business level insurance, consumers were putting in a lot of claims due to loss of business income or some kind of an issue that might have come in place from a health standpoint. There's a lot of guidance that's also been issued from an insurance regulatory body standpoint. So it's been like a period of turmoil. It's been a period of intense change for various consumers that they had to grapple with during this time frame. Now, if we shift the focus in terms of how financial institutions are coping with, they are getting guidance and relief from regulators, but at the same time, there's also been a profound shift in the first line of defense. So when you think about the first line of defense, let's take a simple example of the call center operations in a banking institutions or an insurance company. Clearly, all the regulatory bodies and government agencies, including the federal government, are providing, stimulus packages, profound amounts of relief. But the financial institutions have to translate to the first line of defense to make sure that the consumers are getting the relief that they need. And that's been an interesting challenge. As we all know, even in normal circumstances, translating a regulatory change to something that can be implemented in the first line is quite a challenge, and it takes some time, and you have to roll this out and bring the organization along with that change. It takes time, but doing this overnight has definitely been challenging for financial institutions. So, and on that note, I'd like to see if you have some thoughts in terms of how some Archer customers are dealing with these rapid changes, particularly when it comes to rolling it out to the first line of defense.
Yeah, absolutely. It's a very challenging time from that side, and I think you hit a number of the points in what you commented on in terms of we don't see a lot of changes necessarily happening from an actual regulation or legislation perspective. We have a lot of activities that are coming through as more guidance oriented, or bulletins or things of that sort, and those are happening at a localized level, at a state level, city, as well as nationally and internationally, of course. And so what you see with the first line is really the driver is that we have to automate more of this information. We have to automate the ability for the first line to be able to understand what the potential impacts are, to be able to evaluate those impacts, and be able to show how they're responding to it, right? To show the evidence of what they're doing in times where guidance may be somewhat contradictory or maybe unclear, and as it continues to evolve and drive some of those pieces. So I think the first line of defense is really having a big challenge with that. It's very much in a lot of ways like the 2008 2009 timeframe, from what we're seeing with customers and what they're trying to do with Archer and their operations. They've got to figure out ways to streamline all of the, as you like to say, the fire hose of information that's coming through, and keep that under control, be able to respond to it effectively, and make sure that they didn't miss something. A key part of all of those pieces is making sure that they've actually been able to capture the information, do something about it, and drive it home from there. So seeing a lot of that, and I think it's going to continue as we move into next year, because we are going to be in a constrained financial situation for a period of time. And that's going to continue to drive that desire for automation and improvement in that information flow across the entire life cycle. So
Absolutely, and that's very interesting insights that you have shared in terms of how these programs are rapidly trying to adapt to the changing circumstances overnight. Some of the other areas that the consumers have been really struggling with is price gouging. And thankfully, there's been like some form of relief that has been delivered, not only from the federal regulatory bodies within the US or internationally, but also various state level governors have sent out very strict rules in terms of how prices can be increased for the consumer during these challenging times. For example, in California, the prices of any particular product, whether it is, and this could be any consumer product and really doesn't even restrict itself to financial services, cannot be over 10%. Something like that these kind of measures have really, helped slow down the fluctuations in supply versus demand. Yes, we tend to always look at, the loss of demand for various things during the pandemic, but demand has significantly increased for a number of other consumer goods as well. Yeah. So these kind of measures are timeous and have been extremely helpful in protecting, consumer interests.
I know the delivery services haven't stopped coming to my house on a regular basis. That's for sure.
Absolutely. And it's been a profound shift too for a lot of consumers to really change the way they are, buying and purchasing and things like that.
Yep, absolutely. That's an interesting idea. So from a global markets perspective, right? So you look at the overall global economy, and again, not even just financial services, just all those different areas. What do you think the impact has been globally from a regulation perspective relative to COVID-19? To sort of continue on with your thought there.
Yeah. So from a global markets perspective, it's been a mixed story. around the planet, right? So, and obviously within the US markets, we are seeing certain sections of the market itself being profoundly disjointed from the reality of what's happening with the unemployment rates or consumers struggling with various things. But at the same time, there is an argument to be made that US markets are reacting positively to those companies that have successfully responded to the pandemic and provided solutions in a pandemic world, be it the tech areas or areas which have minimized human contact, products such as DocuSign and so on and so forth. The markets have reacted very positively for those kind of products. But at the same time, we have seen markets also fluctuate quite a bit with respect to some form of, travel. The sector has been impacted significantly where it's been really apparent. But around the world, the markets have been doing okay. Japan has historically been dealing with a negative inflation or a deflation, in other words, and they have sustained that same process for the most part because they were already in a deflation mode. And other Asian markets or EMEA markets have definitely seen an impact, but they have also rebounded, but definitely not so much of a rebound as in within the US, right? Which is primarily been led by um, a lot of these technology companies. Now, what does this mean from a regulatory standpoint? It has created an immense number of issues with respect to cybersecurity. And because everything being virtualized, people are moving from really secure semi-manual processes to virtual formats, be it in trading, be it in the buy side, be it in the sell side, be it in the securitization of assets. There has been a lot of cybersecurity issues that have come up as well. Which a lot of, for example, FinCEN has issued a lot of guidance around how to track and manage imposters or how to track and manage various cybersecurity flaws. So this has been like an interesting development from the regulator standpoint. The regulators have also kind of looked away and given most of these financial services within these markets a free hand in terms of virtualizing themselves. But at the same time, they've not necessarily, but they've done it for a period of time. But now I'm seeing more and more regulators coming back and saying, look, okay, you had some relief. Now you have virtualized. Now we need to start our regular exam process, our programs. So we've seen the Texas securities regulator who's already issued guidances in terms of what the exam handbooks are going to look like and how exams are going to be conducted.
Yep.
And this has been like an interesting mix of reactions from global markets. But what I feel beyond the relief itself, the next 18 months is going to see profound changes because these virtualized businesses or virtualized trading models or virtualized insurance companies are not necessarily going to go back to what they were pre-pandemic.
Yep.
So there's going to be new regulation, there's going to be new guidance, there's going to be like new things that these financial institutions have to deal with globally.
And the tentacles, to your point, are really have really spread. The cybersecurity example was a great example of that, where companies were already significantly challenged to manage their cybersecurity operations for a regular bricks and mortar scenario. And now that they've completely virtualized, they have to accelerate that capability dramatically. And in the cyberspace, we have more standards-oriented activities, but I think to your point, now the expectations from the regulators and the expectations that we're hearing from our customers are that they've got to be prepared to not only do the activities they were doing before and the improvements they were creating before for their perimeter defenses, but now that the perimeter is shattered, in effect, by the disbursement of staff and capabilities and integration, deeper integration with third parties, they definitely have a harder time to continue moving that forward. So.
Yep. And on that note, I did have a follow-up question for you, Tim. Most of these regulators, particularly in the global market side, when they are issuing these guidances around cybersecurity, they're also putting a lot of emphasis. I've seen a lot of guidance from FCA, for example, or FFIEC in the US or Hong Kong Monetary Authority. A lot of guidance has come in terms of how cybersecurity regulations should be embedded as part of the overall operational risk within the technology or program itself, or whether it is IT risk or whether it is cyber risk. How are customers trying to configure these kind of risk programs in these, the changing regulatory landscape?
Yep, no, it's a significant challenge for a lot of customers, especially folks who have been using Archer to have their siloed different areas of the application space. And so they may have a siloed cyber risk capability, there may be a siloed policy capability, and those things, while they had some level of integration because they're within a single platform, they're not integrated from an actual business process perspective. And now those barriers between those areas, right, are now much more, they're much more aligned than they've ever been in the past, right? They need to be able to say, what is the footprint from an IT risk perspective of this dispersed organization that we have, and how does that actually align to our regulations or standards that we have from a cybersecurity perspective, from an IT perspective. So we hear a lot of conversation about, especially when people are doing things in the are looking at these different capabilities and they have to cross state borders or any kind of a national activity that they might be doing. We're seeing folks who really want to be able to align that whole IT risk standard, standard suite, with COVID or ITIL or any of those sort of industry standards with the actual regulations and the expectations from an exam perspective. And that's a really interesting development because I think it's very useful for most companies to think about it that way. It actually helps them to break down some of those barriers internally and really think about the end-to-end process capability as opposed to just my cybersecurity area or just my IT risk area or my business operations. That's all part of a risk and control self-assessment to understand what are the control failures that are happening within your business segment. And so those things happening inside of Archer, where we can bring all of that data together in a way that allows for the cybersecurity team to still manage their incidents and threats in a very contained way, but actually give that insight into the organization to say, as a first line business manager, be able to say when they're coming in to do that exam or when I have to actually respond to a regulatory request, I can now tie that regulatory request to all of the information that's available through the Archer platform. And that's going to be a big value for the companies that are doing that successfully, because it's going to be a very difficult task, to your point before, over the next year as they're completely revamping their operations in this more virtualized world. They're going to really be struggling to sort of bring that information together in a way that's consistent and provides the right level of evidence to those individuals. So.
Absolutely, and thanks for commenting on that. And in the same vein, having some kind of a program that is institutionalized and acceptable to a global user base is always a challenge, particularly when we're dealing with regulatory compliance, right? Regionally, the needs could be different, the pressures could be different from a regulatory standpoint, the pressures could be different from a first line or consumer standpoint. If someone has to configure different regulatory programs, obviously, we can provide the content that supports it. But if you were to configure different regulatory programs within the same instance of Archer, so that you're able to achieve effectively the localized needs and the separation of duties, but at the same time, you're not compromising on that aggregated reporting view that every chief compliance officer really looks to achieve. Could you comment on that, please?
No, it's and in CastleHill, you're going to get me on my soapbox, SK. Sorry. At CastleHill, we talk about the business hub, and so the business hub is a framework component. When we work with our customers inside of Archer, we talk about how to actually transition from this concept of looking at the individual risk areas to actually looking at it as a function of your business. And so inside of Archer, if you properly configure the core of the platform and you've got the appropriate dimensional information about your business, about the products you sell, about the different regulations that are going to apply to you, the policies that are associated with it, third parties, all of that information, or what I like to call the facts about your company. If you configure that stuff and that information effectively inside of Archer, then that question that compliance executive is going to ask to say, for this specific business unit or this specific geography or this specific factory location, getting outside of the financial services world, that particular, what is the risk profile of that particular dimension that I actually want to care about? And that's now consistent data, right? Because you're bringing all that information together through the business hub. And so regardless of whether you're performing a cyber assessment or a regulatory assessment, compliance assessment, you actually are going to be able to see that that is the same physical location, right? It's the same geography, it's the same product that you're talking about within that space, and be able to do those capabilities in a consistent way is really going to be important as people move forward. It's a tremendous time and very painful reporting effort if you haven't done that. And it's where a lot of the GRC capabilities start to fall down when people don't do that effectively. They just don't get the value out of those tools, and it creates that frustration for the compliance managers or the risk managers, and drives them a little bit crazy. So it's very fun.
Absolutely. But definitely there are options. It's good to know that there are options where you can deal with things at the micro level without losing the macro focus of achieving, whatever the executive objectives are. So good to hear on that. So now let's talk about the virtualization of the financial services industry, right? And I'd like to start off with your own personal journey of moving your organization, working face to face, meeting clients and working face to face with clients to this virtualized format, where your entire workforce is now working in a virtual format. So it would be interesting to understand how you managed to do that transition. At the same time, how are you dealing with your clients?
Yep. No, it's been very interesting, and we have different clients, that have different requirements relative to the services that we provide for them. So we have clients that were already very comfortable with the virtualization scenario, and they weren't particularly interested in having people come on site or having those sort of activities. And it may just have been a single quarterly review type of activity that we were performing with some of those customers. But then we had other customers where they relied on our teams, our staff members, to actually be on site, to be participating in the definition of those risk programs, or in the execution of those risk programs, or the technology solutions behind them. And for those folks, it's been very interesting. So as a company, CastleHill has always been very flexible in terms of being able to be virtualized, or to be working collaboratively with our customers. And so we had a lot of the tools already available from that perspective. And what we've done is we've made sure that we've continued the journey to harden some of those perimeters, and make sure that as we have become more fully virtualized, for the folks who were not used to doing that they understand that capability, they understand how to work within that world. And we've probably the biggest change that we've done is that we've set up much more formal lines of communication than we may have done in the past. And I think that's a key component to being successful within the pandemic situation, is making sure that the opportunity and the formality of communication is still there. And so, doing video calls and at set times and driving some of those capabilities have been a big part of what we've done, together with the behind the scenes validation and hardening of some of those different areas. Our clients have had a much more interesting time in a lot of cases. And so, as I said, some folks who were very comfortable with the virtualization suddenly had children at home, or they have they can't go out and do certain things, or they can't travel to different office locations on an occasional basis. And those in many cases are folks who have really been challenged with this, because they were already virtualized, but now they have a completely different disruption to what they do on a regular basis. So it's been really interesting from that perspective to see how they've dealt with some of those capabilities. For companies that had more of an on-site presence where we were working with things, that's been more challenging in many cases for them, and they've had to go through that journey to virtualize their own teams, while also looking at the fact that consultants were coming into the location, and how do they deal with some of those pieces. What we've seen is a big swing in sort of policy definition. So how are people actually responding to it from a policy perspective? We've seen, again, the communication really ramp up, because where they may have relied on physical posters or materials that were inside of a building, they now need to make sure that those are available for anyone to be able to see. And I think probably the last piece of this is, what is the expectations going forward? So are they going to be bringing people back into those offices? Are they going to be doing things? And we see a lot of customers who are really struggling and grappling with that, and how to make sure that they're prepared for how many people they're going to bring back into the office. And then if they have to then disperse those people again because of an uptick or an upswing or a particular incident that may actually happen on a physical location that they have. So it's definitely been an interesting situation. First couple of months, a lot of people struggled with the capability, and happily we were able to help them through that because we were prepared from a virtual perspective. But I think people are starting to become more comfortable with the situation they have as best as we can. And I think, to your earlier point, I think that's why some of the regulators are now starting to look and see that it's time to start doing those exams and to change the way in which they do those pieces.
Absolutely. And thanks for bringing up exams in particular as well, right? Because I've been seeing an increased amount of regulatory activity around exams itself. One would think regulators are basically softening their stance. They're not really following up on, of course, there are some guidances that they have enforced, and these are things that people are trying to take it to the first line and making it an implemented change. But Texas State Banking Department has issued virtual guidance to conduct a virtual exam. And that was very interesting to me. In my experience working with customers who are dealing with, any kind of a regulatory exam, yes, a lot of the information is stored online in a system or submitted in a secure file to the regulator, but the act of the exam itself is done in physically in a room, right? You set up the exam, the regulator comes in, sits next to you, and starts asking various questions, or what they call as findings or exam findings, and off you go. You respond to the findings on the fly. You can rely on a system, you can rely on a systematic approach you might have been implementing in your financial institution, but this was something that was done in a face-to-face setting. But Texas State Banking Department is now doing it in a virtual format. Similarly, FFIEC is not focusing on the entirety of their regulatory requirement, but when it comes to cybersecurity, when it comes to price gouging, when it comes to imposter issues, when it comes to money mule schemes, when it comes to money transfer rules, they're trying to handle all of those urgently on an urgent basis through a virtual, not necessarily an exam, but call it as a guidance session that they're doing with financial institutions. So they are really being hands-on. So to think that the regulators are not really being active is definitely not the case. But at the same time, to also handle this kind of a virtual format of conducting exams is definitely a challenge.
Yep.
And similarly, formal within the company, you touched on policies. Which are very specific to every organization. But I think of policies as your internal regulatory body, if you will, right? At the same time, you have functions like internal audit, which is an independent third party within the company that's trying to sort of audit various processes, various accounts, so on and so forth. And that's also something that, even though you have a system where you capture all the work papers, the tests, and the audit results, so on and so forth, it's become virtualized. So I'm curious to understand how some of the Archer customers are dealing with this kind of immediate virtualization of age-old existing workflows.
Yep, no, it's I think it's one of the two most discussed topics that we have across all of our customers. And so and I would almost genericize it as that control testing and validation concept, because it is, both of those conversations are definitely happening. So from an audit perspective, specifically to your question, audit is definitely struggling to do this because that third line function has always relied on this concept that they're going to get together with people in a room, like you talked about, and they're going to examine the materials. They're going to inspect what's going on. They're going to pull the string and follow the string through all of the different processes and all of the different evidence that's been collected by the first line or the second line. And so that activity is now having to be virtualized, which is forcing the audit teams to really have to rely on the information inside of Archer. And so data quality becomes a critical component. And so, back to that, my soapbox about the business hub, making sure that the actual information is aligned across the different risk programs and different risk areas. So when we are doing a regulatory change evaluation or regulatory change assessment, or responding to guidance or any of those pieces, that we actually understand what is the full suite of capabilities across the company. What are the third parties that are impacted? What business units are impacted? What applications are impacted? Now, what virtual environments are impacted? Those things have to be of quality data, or else audit is going to have some very significant challenges, because they won't be able to do that in a physical challenge kind of a scenario. They have to rely on the data. So I think that what we're going to see as it comes out of the pandemic is we're going to see an increased requirement from the audit teams around what the controls are for that data quality at the first line. And Archer certainly plays into that ability. It's made for driving that capability, but there's going to be some process changes. There's going to be some intention changes with people making sure that they actually have that data quality at the first line, because I think that the relative scale of the infraction, so to speak, from a third line perspective for somebody not having that information available virtually is going to be much more significant than it ever was in the past. So it's going to be an interesting space.
Absolutely, and we are directly feeling the extra reliance on content providers like ourselves, where customers are saying, "Look, time is of the essence. We're already dealing with a lot. We're going through profound changes across various programs. But as a content provider, is there anything else that you can do to make this information even more useful for us? Contextualize it to what I'm already doing, whether it's a business, whether it's a policy change, or give me more information, give me more definition that helps us out." And that's something that we are constantly trying to respond to, and we are trying to evolve as well. And and a small plug here for Wolters Kluwer is that we've also provided concise amounts of COVID-19 specific regulations that we've been sharing for free with the whole world out there, right? I mean, these are challenging times. Some of these kind of motives beyond your own day-to-day business have to come out, and that's something that we are also trying to do to help these different lines.
Yep, I think it's a great, and those newsletters are awesome. I really appreciate them personally from a business perspective, right? From my own managing director side of that side of it. But the other piece is, I think it's really interesting what you brought up, because we have that duality, and we talked about it before, about the fact that the policy is effectively an internal regulation, or the this is how we're going to run our business view of a company's perspective. And so the need from a company to be able to say, here's our policy in terms of our virtualizing, or how people are going to respond to those things, what our communication policies, all of those different pieces. And so they're looking for guidance from that perspective, just like they're looking for guidance on the regulatory side, and getting that context together. So we're definitely having a lot of conversations with prospects and with customers about how do you bring those two pieces of information together, and how do you ensure that what we think internally matches what is coming from industry and from Wolters Kluwer from a content and context perspective, for all that different guidance that's happening. I think marrying those things in Archer is going to be the opportunity for the companies that are going to do this well, and are going to not have to really increase the spend or the cost of their risk management capability if they're able to do those pieces very well. So that'll be interesting. I know we're getting a little bit into it. SK, I had one other question, and maybe we can then look and see if there's any additional questions from the audience. Which regulators are being more active than others in the pandemic? I'm very fascinated by that, to see the differences based on different countries or different bodies in the organization. And you talked a little bit about it earlier, but can you talk a little bit more about that?
So that's an interesting question, Tim. Thank you for raising that. Sure. What we've been seeing is the regulatory bodies across all financial services have been generally very active. Okay. But the need of the hour is consumer protection. So when you look at the federal level, you will see CFPB has been issuing a lot of guidance around how to deal with consumers. Mm-hmm. And we also have seen governments responding in unprecedented ways, right? Within the US itself, we have seen the Paycheck Protection Plan, which has been very profound in helping consumers and small businesses. Similarly, we have seen like various other bailouts that have been occurring around the world, which have also been very instrumental. So it's just not the regulatory bodies, but governments as well that have been responding to this. And there's a lot of follow through that had to take place within the financial services institutions in order to implement some of these guidelines and the loan processing, so on and so forth.
Yep.
Similarly, we have seen a lot of the state banking departments really being focused on consumers, as we've discussed extensively. The state banking departments have provided a lot of guidance around how to deal with mortgage loans, student loans, various other lending activities. You have seen the state insurance departments within the US provide a lot of guidance in terms of dealing with consumers within insurance. There's been a lot of backlash too. There are other issues that have come up because an unprecedented number of insurance claims have been put forth. And a lot of insurance companies are processing these, and many of them are being denied. And this has resulted in a huge number of court cases, and regulators are getting involved in terms of providing guidance around these court cases as well. And so there's just been a lot of that activity, particularly around court cases in insurance companies. So every state level insurance regulatory body is dealing with that. We've been seeing an increased amount of activity from data privacy regulator, the Canadian data privacy regulator, the GDPR regulations. Within the US, we have the California Attorney General, who has issued a lot of guidelines around CCPA. It's been in the works for quite some time, but the pandemic has hastened the amount of privacy regulations that have come up within the US. And close to a dozen plus states are already issuing privacy regulations through various avenues within the state level regulatory body. So we've seen that level of activity as well. Um, I have seen FDIC being a little bit dormant, but at the same time, their guidelines are fairly straightforward. So it's always been in place, but so they really didn't have to issue new guidance around FDIC regulations during the pandemic time, which has also been great for consumers to have a little bit of peace of mind during these uncertain times. um, Globally, we have seen various other financial privacy regulations come into play, whether it is in India or Hong Kong. There's been a lot of that regulation that has come into play as well. And within FCA, we touched on it briefly, but there has been a lot of guidance around cybersecurity that they have issued as well.
Yeah.
So there's a lot of activity, but I do feel in terms of the volume of activity, it's yet to come. There's going to be a lot more guidance that will be coming out, a lot of new implementations that need to come into place. That is yet to come, and we're going to see a lot of it.
Yep. So it looks like one of the questions in the chat, and sort of in that same theme, those regulations that are protecting consumers from more of a financial services perspective, have you seen any indication of regulatory changes coming through to protect them from a remote work perspective as well? Anything from that side of it? I know in Europe, in Ireland, where we have a presence as well, there's some of those regulations are coming through. Have you seen any of that in the US, or is it really still more on the global side?
It's more on the global side. Definitely flexibilities around this whole process have been issued.
Yep.
For example, late payment fees within the US have dramatically shifted, right? Like even 9 months ago, late payment fees were as strict as 30 days in some states versus 60 days in other states or 90 days in other states.
Yep.
Of course, financial institutions can adopt their own global standard. Just because someone says, a state regulator says 30, they do not have to necessarily implement that.
Yeah.
But there's just been like some relief provided there where the state level regulators said, like, you can give more relief, which has actually helped out the consumers. And flexibilities have been implemented through mortgage loans as well. So the loan processing activities is entirely virtual.
Yeah.
Right. And it's basically no more paper format, and they're giving a lot of concessions to the fintechs in order to be able to handle a virtual format, which has been an interesting development. If anyone has closed a home recently, they're very familiar with this new process.
A lot of people have.
Yeah,
No
exactly.
question.
Yeah, extra time maybe during the pandemic time, right? Good time to close and buy homes.
Yeah.
So we have seen a lot of those, and FRB has issued new guidances around stress testing. Right, the pressures of stress testing and financial risk management are not going to go down. You're still going to have to do it if people are trading and having bank accounts and transacting and money transfer, whatever the case might be. New stress testing guidelines have been issued to make it easy to handle some of these reporting activities in a virtual format.
Yep.
We're seeing regulators provide like those kind of guidelines also within the US. But as I had mentioned a few times, we're scratching the surface. We're going to see more and more changes come up, and we'll have to see how this plays out.
Yep. Just sort of ripping on that from another comment in the chat. So, and just the continuity, right? So business resiliency and continuity. I think, I'm assuming. I know from our perspective, we believe that's where a significant number of audit and second line and regulatory focus is going to come into play. And so as you see folks who are moving away from some of the financial services hubs, New York City and London and other areas, now not only do you have the fact that a lot of resiliency plans were based on co-location or physical movement of an employee to another location, which was set up in a certain way. Now we have that virtualization, which people have kind of crested that wave enough to at least get through the virtualization piece. But now as people continue to realize that where they physically are has become less important and will likely be less important for the next couple of years, that's going to be a really interesting challenge as we move forward. And we're, business resiliency, the whole concept of disaster recovery and business continuity is really transitioning into this whole idea of more of an operational resiliency, as opposed to just the traditional, we had a natural disaster of some sort, or a building fire, or some disruption in the supply chain. The reality of that world is now very, very different from a third party perspective, from the cyber perspective. And now with people moving into different locales, different states in the US or different countries, you also have the additional burden of now needing to know what the difference is between a Massachusetts state law versus a Texas state law, back to your privacy comments, all of those things. That's going to be an interesting piece. Any thoughts on that as we evolve the continuity landscape?
Yeah, I mean, you know what? That's a massive challenge that's always been in existence, right? And one challenge that's historically been overcome with a lot of legal experts and lawyers within a banking institution. I mean, take a few topics which are hot button topics, right? Elder abuse law, or loan payment deferral rules, or reporting loan defaults to first party or third parties. All of these things are going to fluctuate as consumers move from one state to the other, and everything is happening on a rapid basis. And similarly, policies, insurance policies tend to be very, micro focused based on the location, even the zip code in the street where this person is residing or domiciled in. And now suddenly all of these changes have to basically reflect on the policy changes. I think increasingly, as providers of regulatory content solutions, we have to go back and rely on more automation, more machine learning that allows us to analyze information across different states, and really work hand in hand with these financial institutions and other Archer customers to identify commonalities or themes that exist across these different topics, so they can then adopt like one single global standard or a national standard within the US to focus on late payment charges, or debt collector requirements, or elder abuse law, or English language proficiency, whatever the case might be. So these are some of the new challenges that we have to focus on to help with this kind of changing landscape. And we are thinking about this, and we're working on this. We have some solutions around it, and we are trying to provide this sort of value to our customers through technologies like Archer.
Yep. Yeah, so just having a conversation with one of our clients yesterday, talking about the difference between a high risk business process and a high risk resiliency process. Right, there are, people assume that they're all the same, but especially as this new evolution happens relative to it's the rapid evolution to virtualization. Those are going to diverge for a little while, and that's going to be a very interesting view. Sort of taking it back to that third line side of it. Third line is going to have to really be able to understand where that process lives relative to the resiliency or continuity aspects of it versus the criticality to the actual business to be able to perform it. So there's places that have been ignored or have been considered low risk in many ways that are now not going to be so low risk. Mailing something to somebody has become a lot more interesting with all the data privacy laws and the fact that they've now moved across a state border, or just, to your point, any of those different pieces. How do you make sure that you're actually accounting for those from a business operations perspective? So Archer and the content from Wolters Kluwer can certainly help provide that framework in a very consistent way, and that's what we sell. So.
Absolutely. And from a regulatory standpoint, definitely risk frameworks are, I mean, the guidance around, any form of business risk has also been coming through.
Yep.
Be it operational risk, cybersecurity risk, it's definitely been there. In terms of business resiliency, are there any kind of early warning kind of programs that some of the Archer customers are looking to implement at this point, or?
I think it's that's a really interesting question, because I think it's really the cyber side of it, and we've talked about it a couple of times. I think it's people really being nervous that they don't have a good grip on the cybersecurity implications relative to resiliency. You make the joke that somebody can just go to a cafe and work from the cafe. That's not true anymore, and especially as we move into the colder months in the U.S. That ability for somebody just to go somewhere and do it. Not only that, but you have potentially children at home or extended family members living in a same location. You have the physical dangers that are there from a resiliency perspective of a laptop being used by a child for some schoolwork, or by a relative for just to go and look at that one little website that they needed. And now you have that opportunity for those things to be happening as well. So what we're seeing is definitely that concern about, do we have the cybersecurity practices really deeply aligned with our continuity practices? And can we test those in an automated way? Because you can't send somebody to everyone's house and check and see what they're doing. It's not the commercials that you might see or things, but that's a big piece of what we're seeing. And I know just recently in the Archer conference, it's one of the topics that they were talking through as well.
Very interesting. Very interesting.
Awesome. Anything you want to close with, SK? I know we're just coming up on time very shortly.
No, I think I enjoyed this conversation very much. We touched on a variety of topics, but just to take the time to reflect and speak about this is always a good thing. So I appreciate you having me on this coffee chat.
No problem. And hopefully folks have enjoyed the coffee that they've had. I've enjoyed mine, certainly. But again, it's the pandemic has been a very interesting time from a risk management perspective. It's been a very interesting time from a personal perspective for everyone, of course, even more importantly. And so I hope everyone is staying safe and continues to stay safe, and think about those risks and how to use the right kinds of tools and the right kind of content to make yourself more efficient in driving those capabilities through your organization. So thank you everyone for joining us. Have a great day. Bye-bye.